Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 739th installment, baby. Yeah. These videos are geared to teach you the art of technical analysis. As we know, fundamentals always come out in the charts first, so the best place to look for where the market should go next is in the charts, and we're here to teach you how to read those charts. I'm Oscar Carboni. Remember that futures trading is risky and can cause substantial financial loss. Please do not trade these markets if you do not use stops, if you do not put your stops in first, and if you do not have risk capital to lose. If you are a trader out there that understands the risks, I've been doing this almost 29 full years, traders, and I'm here to give you a little bit of a story for tonight, trading into the next couple of days. Tonight, we're filming this video on Tuesday night for Trading Wednesday. That's June 8, 2011. Traders, what's on my board? Well, when we look to my left, we have a red omni for the ES. We have a green omni for the euro currency. And then we have a red omni for dollar index. And that's what I think is going to happen. And let me explain a little bit more. Traders, the indices are still pointing lower. Technically, it looks like we're going to at least start off tomorrow on the downside, and we're looking to short the S&P, NASDAQ. The euro currency is certainly pointing north, and the omni has already scooped those up this afternoon. So the omni's already long tonight, euros, expecting euros to go higher. Then we have the dollar index, which is still bearish, looking very bearish, which should boost our stock market in the near future, traders. This is how the game works. The Fed started pushing our dollar down when they knew that we were in trouble. Pushing the dollar down has buoyed our stock market for the last year and a half, and now the dollar's heading right back down again. A week and a half ago, the dollar was heading up for about 2 weeks, and the stock market started to feel the pain. Now the dollar is starting to head back down. Usually the stock market lags behind those dollar moves, so very soon in the near future, we should be able to turn this red arrow into a green one, and I would love to see a green omni come up in that S&P, but there is not one for trading at the onset of Wednesday. Traders, I got a couple of charts I'd like to show you which should illustrate a couple of things. One, do not forget long-term view. Take a bird's eye view, step out, look down at the markets like you were looking at the forest instead of the trees, and make sure that you recognize that the path of the forest that we have been in has been bullish. And yes, we are in a bull market in the S&P, NASDAQ, transportation average, industrial average, you name it. But no bull market ever goes straight up. It never goes like this. It's almost always a jagged run over a few years. That is what we're experiencing now, and I say that to you because of this. If the dollar is heading down, it is going to make our stock market eventually start to head back up. Again, I'm not calling for that at the onset of Trading Wednesday. It could happen by the end of Wednesday, Thursday, maybe Monday next week, but the dollar heading down is going to keep us in our bull market, but you do have to trade like a bearish trader tonight into tomorrow at least, and then we'll see where it goes. Traders, an apology must go out to you Omniacs, especially you, the Omniacs that were in my premium room today, because you witnessed me make an amateurish move, and I have to ask you, traders, you guys have been with me, you guys and gals have been with me over 4 years now. When's the last time you seen me interfere with an omni trade? About 2 years ago, and you know what happened that day? The day I interfered, the market broke severely, and we would have had a big fat profit if I didn't interfere. And you know me. When I come up with a trading plan, the plan gets done on a Tuesday night for Trading Wednesday, and I don't alter the plan. We don't look at the chart during the day on Wednesday. We just enact the plan. So we plan a trade and trade a plan. About 2 years ago, I can remember interfering with an omni trade, and it cost us all. Well, today, the market is moving. It's getting right near our stop, and I decided to tell my Omniacs, you know I never interfere with trades, but I think the S&P is starting to get a little bullish today. Let's get out right here before it starts to be costly, because we sold it around 12.90 to 91, and it was trading 94.5, a little baby loss. and I get my OMNIX out right there. But the plan was stops go above 1295.5. It's at 1280. It's at 1294.5 right now. And I go, you know what? Let's just get out here. I interfered like an amateur. Here's what happens. The market stops cold where we get out, and it drops at the end of the day, giving us an $8 to $10 profit if we would have just not allowed Oscar to interfere. Traders, a lesson to go out to you, because you know I don't interfere with my trades. You know I am steadfast, and I interfered with a winner, and it cost us yesterday a small loss, but still. Imagine me being so amateurish at 29 years into this game that I actually interfered with my trading plan. Lesson to all of you Omniacs. Once we plan a trade, trade that plan. Do not interfere with the trading plan. My apologies for getting us out yesterday. You won't see that again for hopefully another 2 years. On with the show. All right, traders. So what do we have next? I'm going to put some charts on the board that are going to show you this indices still pointing lower for at least Wednesday. Euro absolutely pointing north, and the dollar index pointing towards the downside. Let's make sure that we keep ourselves in check here and recognize that no matter what you want to call this, my friends, is a bull market. The March 2009 lows, traders, March 2009, here's where we were. You're looking at the Dow Jones Transportation Average, and it is a weekly chart. We put our lows in after the major crash. You know, it started all the way up here. Boom, boom, boom. We had our crash. March lows come in. We rallied up, had a pullback. Rallied up, are having a pullback. Look at the pullback we had here that did not turn us into a bear market. Traders, does this move right here really scare you into thinking that it's the beginning of the end? I mean, does that move right there really make you jump out of your skin? It doesn't make me jump out of my skin. In fact, we're testing an average that the last time we got down to it, it held. And we are coming to major support that has been holding since March of 2009 with two tests that both held. When I look at that chart, I say, yes, there's room to come down here, so there's room for another couple of down days. This is not a bearish looking chart. That's your Dow Jones Transportation Average, the leader of U.S. indices weekly bar chart. Next on the board is the Dow Jones Industrial Average weekly bar chart. Once again, traders, you cannot call this a bear market. Look at the major run pullback, major run pullback, major run pullback, major run small pullback, major run pullback, nice run new highs, small pullback. I would not worry about this. You'd only worry about this if you took this out. Then you become kind of bearish. Unless you take this area out, you are still in a bull market solidly. This area would have to be taken out before we could become bears and call it a bear market. So yes, we're trading as bears tomorrow, Wednesday, but we know to watch out for some support coming in soon. Let's look at another chart here. Dow Jones Transportation Average daily bar chart. Traders, this is the daily now, right? Now we're looking at the trees. We were looking at the forest in that last chart. So now we're looking at the trees. What you'll recognize is, once again, big booming market for quite some time, has a pullback, gets under the Omni average and puts in this little V bottom, gets right back above it, and back into the bull market we go. Here we are today, present day, putting in a little bit of a V move, just slightly under the average. It looks very much like this, and I think that this is exactly what's going to happen, and we're going to ride it right back up. Now, of course, traders, we are under my Omni average for 3 days, so that makes me bearish no matter what as a day trader, but it does not keep me bearish longer term, unless, of course, this market takes out lows down here. If you take this area out, then, of course, we will revisit the market and possibly become full-blown bears. For now, I am a bullish trader who has to act bearish for short term while we're testing support. Let's look at more. The NASDAQ clearly illustrates that we need to go a little bit lower, and Wednesday we are probably going to head down to this area. So NASDAQ is something that you would probably want to be short for on Wednesday. Then you have the Russell 2000. Once again, same sort of thing. Russell 3 days now below the average and has room to come down at least to here. So Russell tells us to be short at least at the onset of trading on Wednesday. And then we have the E-mini S&P. The emini S&P is interesting because it's already testing its support and is starting to act slightly buoyant throughout the day. So I'm assuming the S&P will have a little bit more of a dot down and then find some legs and head right back up. Remember this, traders, if the dollar is going down, it gives buoyancy to our stock market, and the dollar is clearly going down. Huge parallel channel, bearish, cannot maintain levels above the Omni. Last time it tried, failed. The only time it did was here. It stayed up for about a month and then cracked. Big time crack. Got right to the average about a week ago, 2 weeks ago, and has been in a tailspin since. And this is a very bearish look right now. If dollars are bearish, eventually it gives buoyancy to the U.S. stock market. And look at the euro currency. The euro currency looks very strong right here in a very nice bull channel. Has held the Omni average very smartly like it did last time around. And looks like it wants to move to the 148.50 area this week. Euro currency, the 6E, should get here this week. So traders, you're looking at a bullish scenario in euro currency, a bearish scenario in the dollar index. You're looking at a short-term bearish scenario in U.S. indices, which should turn bullish with the dollar moving lower. So traders, that's about all that I wanted to show you on those charts. And now I would like to just let you know to not fall in love with this downside, but I am not telling you to go long and get bullish yet. I will certainly send out signals when the bull comes back, when the market finally gains its legs, and when it heads back up. I'm assuming that because QE2, as it's been dubbed, comes to an end at the end of June, and we are practically in the middle of June now, you have a lot of fund managers that are just simply backing off to see if, when QE2 stops, does it have a tailspin effect on the markets? I do not think that will be the effect at all. In fact, I think buyers are going to come into this market, but we are day traders. We will take this one day at a time. We will not anticipate anything that does not come off the charts first. Okay, traders, so there's my story, and I'm sticking to it. I hope these charts are helping you to understand how markets work, understand the relationship between the dollar and the euro currency, the dollar and the stock market, the dollar and commodities, because in a lot of these videos, I like to show you those differences so you have a longer term view so that you can trade short term correctly. Traders, if you like the analysis in these videos, come on down to my site. It's livewithoscar.com. Grab a free membership. Don't trade alone. Come trade in my trading rooms with us. We have an ever-growing army of Omniacs. It grows every day. The Omniacs are great to hang out with in my chat rooms, and it'll cost you nothing to join a copper membership. So come on down and join us. All right, traders, that's about it. I want to get out of here. Give me a call anytime, day or night, 702-629-4755. And remember this. We are doing a seminar live here in Vegas, August 20th. It is a free seminar, and I invite all of you Omniacs to come join me in Vegas. I will be there 3 hours performing, and then I will spend as much time with you Omniacs if you come to meet me as you would like to spend with me that week. So come on down and hang out with me for the seminar. I can't wait to meet you Omniacs on August 20th. We will give you much more information about that over the next few videos, and we will send out a blast email to make sure all of you are aware. All right, traders, remember, you got to keep your emotions out of trading, and you got to use good software to do your trading analysis with. And Metastock is a great, great company to get your software from. I want you to use their software because I use it, and I've been using it since I'm 18 years old. So please take a look at this little short right at the end of this video and go there and click the link and check out that free software. All right, traders, remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah.
Making money in the markets is not an easy thing to do.
That's why I chose Metastock, the award-winning analysis and data package. Metastock uses technical analysis, good solid information.
Not just hunches or guesses. This helps me make better trading decisions.
I find the best trades and I can decide when to buy and when to sell.
With Metastock, I trade more confidently.
And that's helped me be more successful.
Go to metastock.com/TG7 right now to get your free 30-day trial of Metastock software.
I love Metastock.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.